Alright, bet today is the 9th of April, being a Thursday, and in relation to the economic calendar, we had high impact news at 8:30 on the same wavelength as unemployment claims, so nothing too fancy. We're just gonna go ahead and take a look at the two trades I took today during the PM session. Basically one trade because I ineffectively managed the first trade, so the second entry is still the same idea, but as usual, we're just going to take a brief look at the higher time frames. So I'm going to look to do a weekly review tomorrow. So I'm not actually going to touch on what we have done because we have done quite a lot over the course of the past week and a half or 2 weeks in a sense. But overall, focusing on just today's price action and just today's trade, price action is bullish when we're looking at the daily. We're seeing bullish signatures presenting themselves, and we have Thursday's price action being right here. What we take notice to is the fact that the previous day's trading was a rather large range day, and it's a lot more easier to see as to what type of large range day it was on the lower time frames. So jumping into the hour 4, and the hour 4 is essentially where the entire trade for today was stemmed off of, and it was based off of this SIBI right here on the left side of the curve. So same thing, we're seeing bullish signatures, bullish price action on the daily. We're going to see the exact same on the hour 4 as well, bullish signatures, bullish tendencies, X, Y, and Z. We have the previous day's trading being a large range day, and we see that the 1800 candle instantaneous deliverance up towards buy side, and then it's followed with very lethargic price action rolling into the AM session of Tuesday or Wednesday, rolling into the AM session of Wednesday, as well as rolling into the Thursday price action that we had today. So simply just acknowledging what is going on the hour 4, we have this SIBI right here, and we had the inversion of this SIBI during Wednesday's trading. So Wednesday's trading, we had the inversion of the SIBI, and then we had price action simply just resting inside of this SIBI all throughout a majority of yesterday's price action and all throughout a majority of today's price action as well. And what we take a notice to is the fact that the bodies are rather respective of this SIBI. We're not seeing any bodies closing under this SIBI right here. The wicks are coloring outside of the lines, but the bodies are being very respective, and then we have that deliverance up towards buy side engaging with the previous day high. In relation to the trade I took today, it was the 1400 power of 3. So we have this hour 4 candle right here, and the execution was at the low of this candle. So we take a notice of the fact that this 1400 candle ended up coming and engaging with the high of the SIBI for us to then begin delivering up towards the buy side, engaging with the previous candle's high. And then taking a look at the hour 1, it was basically the same premise as well. We had the inversion of a SIBI. So 1400 candle residing right here, we have a deliverance back down into it, and then we have that deliverance back up. So on this 1400 candle, the low is where the point of inception was found for that buy side delivery for the trade. And what we take a notice to is that this SIBI of itself was utilized as resistance at one point in time. So we see during Wednesday's price action, we utilize this SIBI to deliver down towards sell side. We don't do anything of significance, but we utilize it to deliver down towards sell side, and then we have lethargic price action following into the Thursday price action. So very lethargic price action going on here, and then during the AM session we have the inversion of this SIBI, and then it's now utilized as support. So it was once utilized as resistance here, is now being utilized as support here to continue this buy side delivery motion that we have going on overall when we're looking at the markets right here. And then when we drop down into the 15-minute, we have the 1800 opening right here for the Thursday candle, and we can see price action being very, very lethargic. It doesn't want to do anything. It doesn't want to go anywhere all throughout the Asia session, which is normal for Asia to consolidate, but we see this consolidation following through with the London session as well. So London also consolidates. Yes, London does permit some movement. We have the engagement with the Asia low, and then we have that reversal towards buy side engaging with the previous day high, but London is still trapped within a range. What range is price action in? So price is essentially within this range, this candle's high all the way down to this candle's low. This is the range that price action was trading in. So when we take a closer look at it, we have the range high, we have the range low, and then we have the equilibrium. We know that the equilibrium is connected to the delivery phase as consolidation. If price action is at an equilibrium, we can expect for consolidation to occur. Another thing to take a notice of is the fact that we have the midnight opening also aligning with our equilibrium. Once again, this isn't random, this is simply just algorithmic. The true day opening, midnight opening, is also a form of equilibrium. Anything below it is discount, anything above it is premium. And the true day opening itself, midnight opening, is equilibrium in relation to the IPDA reference point. So when we're looking or we're referencing the interbank price delivery algorithm, midnight opening is its equilibrium. So we're seeing the alignment of this range's equilibrium and the midnight opening overlapping with each other when we're paying attention to the 15-minute chart. So briefly looking at what we've done. So we have Asia consolidation, we have London deliverance, engagement with the Asia low, and then we have that point of inception. And I actually don't have this standard deviation projected out because I wasn't paying attention to price until the PM session. I was basically commuting the entire day, but projecting the standard deviation out on prices, projecting for this segment of price action right here, in which we have price action come down and we have a reaccumulation of orders occur at this 11:45 candle, and then we have that deliverance continuing up towards buy side. But that is essentially it when we're taking a look at the 15-minute chart in relation to the day's price action. In relation to the trade, what we were paying attention to was this M15 BISI right here. So we have this deliverance up towards buy side, and we end up engaging with the previous day high. So the Wednesday high of day was engaged with, and when this Wednesday high of day was engaged with was during the New York lunch session. So we have an engagement with buy side at the start of our New York lunch session, and this is what permits for price action to retrace back down into this given range, and then we end up accumulating orders inside of this BISI that resides right here. So engagement with the previous day high during the New York lunch session, retracements back into the range, accumulation of orders inside of this M15 BISI, deliverance back up towards the New York lunch high, cracking correlation, and then point of inception for a market maker sell model begins for sell side delivery to engage with that New York lunch low. So right here would be your New York lunch low. So this would be your New York lunch low, and something that is very important here is to pay attention to the bodies. Observe and acknowledge how the bodies are being very respective of our sell side liquidity being our New York lunch low. We're not seeing any displacement below it. We're not seeing any willingness to continue down below it. Instead, we're utilizing it as support. So 1400 candle, deliver instantaneously engaging with that New York lunch low. Next candle delivers under it, fails to close under it. Next candle delivers under it, fails to close under it. And next candle kisses it goodbye, and then deliverance up towards buy side. Now, I'm not sure if I already mentioned this, but we were framing this entire trade off of the hour 4 chart being right here, and we were framing a 1400 power of 3. We have the engagement with this SIBI that resides right here, and then we have that deliverance up towards buy side. Aligning our time frames, hour 4 with the M15, we have the 1400 candle immediately open, deliverance down towards sell side, and we have the engagement with the New York lunch session low. What we take a notice to is the fact that the 1400 candle did not form a high. The hour 4 candle did not form a high. We just have instantaneous deliverance down towards sell side, so I'm automatically viewing this as manipulation. Then looking for bullish signatures to occur to permit for that buy side delivery to then engage with the buy side that resides right here. Now, before we go and take a look at the trade, what I'm going to bring attention to is the signatures that are occurring and the fractals that are being presented to us when we're observing price. So as we know, this entire trade was stemmed off of this hour 4 SIBI that resides on the left side of the chart right here. So we have this hour 4 SIBI and we have the 1400 candle that ended up delivering into it. So we're just going to quickly add some annotations onto this chart right here. So we're paying attention, hour 4 SIBI that resides here, 1400 candle delivers into it very nicely, deliverance back up towards buy side. Aligning our time frames, dropping down into the M15, we were paying attention to this M15 BISI that resides right here. We're paying attention to this M15 BISI that resides right here. And before I even touch base on it, looking at the hour 4 chart, what we are going to take a note of is the fact that the bodies, I've already said this, but the bodies are being very respective of this SIBI that resides right here. The wicks are painting outside of the lines, but the bodies are being very respective. We're not seeing any displacement below the lower quadrant of this SIBI. When we go back to this chart and we're looking at the M15, we're seeing the same signatures present themselves on the M15 chart as well. The bodies being very respective of this BISI that resides right here. We're seeing the wicks color outside of the lines, but the bodies are staying intact and inside of this BISI. Now, not only are the wicks just painting outside of the lines of the BISI, the wicks are painting outside of the lines to engage with the hour 4 PD array, which was the SIBI we were just taking a look at, for us to then have that buy-side delivery. So essentially what we're looking at here is a fractal. We're looking at the hour 4 signatures being presented here, bodies staying inside of this SIBI, M15, signatures being presented here as well, bodies staying inside of this BISI. Now, taking a look at the trade, I'm not going to touch on the AM session. I wasn't active during the AM session, but very briefly, we have 9:30 opening here. We have that deliverance up, so fake run, and then deliverance back down, engaging with that TLP right there. Then we have that deliverance up, engaging with that range high, then deliverance back down, then deliverance back up. New York lunch high, engaging with our previous day high. So this is where we're going to start. We're going to start the New York lunch high session. We're going to start at the New York lunch high, which engaged with the previous day high. So we have the New York lunch high, which engaged with the previous day high, retracement back down into the range, an accumulation of orders that resides right here, and we're simply just accumulating the New York lunch low session. So this would be the low of the session. The accumulation of orders that occurred right here is the accumulation of our New York lunch low. And then we have deliverance back up towards the buy side. Cracking correlation presented itself here. ES ended up engaging with the New York lunch high. And then we have a retracement back down into the range, delivering into a discount of this respective range, so from this low all the way up to this high, deliverance back down into a discount, then deliverance back up towards the buy side, and then a point of inception is established here. Point of inception is established here. We have a cracking correlation and a change in stay in delivery. And if we just zoom in just a little bit, cracking correlation, change in stay in delivery, technically just one candle. This is an indecisive candle. We don't really look to count these within the sequence, but utilizing this leg as a manipulation leg, we have the -2, -2.5 standard deviation projecting for these equal lows that reside right here, which is very clean. And then we have the -4, -4.5 standard deviation, which is projecting for just under the New York lunch low. But it's not just projecting under the New York lunch low. Once again, if we go back to this chart and we drop down to the M1 and we grab the exact same leg that we were just taking a look at, so this high all the way down to this low, the standard deviation projecting for just under the New York lunch low, which resides right here, but it's also projecting for the hour 4 SIBI that we were framing this entire trade off of. So we can see on the M1 interval how price is very respective of the hour 4 PD array that we were paying attention to. The bodies are being very, very, very respective. We're not seeing any closure inside of this hour 4 PD array, and this is very nice to see. Now going back to the trade, we have that deliverance down towards sell side engagement with our New York lunch low, -4, -4.5, and then we have this lethargic retracement back into the range. We don't deliver up into an equilibrium to offer fair value, and we have price action simply just distort here. So we have the distortion of price here because it's time. I was observing price action, so I came to observe price action once we engaged with the New York lunch low. What I was looking to see was this low be engaged with, because it was all within the time window that we're looking for price to offer us reversals in a sense. Now, we don't always have to see reversals occur during this time window. Sometimes reversals may occur a little after or a little before the time window that we're looking for them to occur at. And this is what happened during the first trade that we ended up taking. The reversal ended up presenting itself before the time window that we're looking for price action to present that reversal signatures essentially. So I was looking for price action to come down and engage with this low, but we just have very lethargic price action here. We're simply just distorting price. So I'm simply just observing to see, okay, are we going to come down and engage with this low? We do. All assets end up engaging with this low, but a cracking correlation is then established right here, and a change in state in delivery is then followed right after. So the first trade was executed off of the change in state in delivery. Like I mentioned before, this point of inception was established before the time window we're looking to execute our trades on. Now, when this happens, when our reversal has occurred before the time window we're looking to look for reversals, when the time window comes, price is simply just going to utilize that window to expand, which is what we end up seeing here. But if we don't do anything of significance before the time window has occurred, then we're going to return back to the PD arrays that established our point of inception, which is why the very first trade I managed it rather ineffectively, because I moved my stop loss one or two times, and it's not really a practice I do. I'm not really in the business of moving my stop loss back and forward, back and forward, back and forward. It's really just a case of my stop loss is here, my stop loss stays there. If I move my stop loss, it's moved for a reason and it will stay there. The only times I really look to end up moving my stop loss is just when the analyst within me is telling me to move my stop loss. So straying a little bit off topic here, there is a ICT Twitter space where he says that when you are engaging with the markets, view it as if you're in a car, and there's three people in that car. There is the trader, there is the analyst, and there is the gambler. Those are the three people that are in the car with you. You are the trader, and then you have the analyst, and then you have the gambler. The gambler should be in the back seat. He should not be driving. The trader is driving. The gambler should not be driving. When the gambler is driving, this is leading to one over leveraging, over risking, over trading, managing trades in a very, very poor manner, all for the sake of outcomes, all for the sake of results. It's up to the trader, being you yourself, to acknowledge who you're listening to, which is why you should only ever look to engage with price action from a sense of clarity and alignment, because whatever the gambler is telling you is not clear. It makes no sense. There's no sense of clarity within whatever the gambler is telling you, and there's no sense of alignment with whatever the gambler is telling you. When you're listening to the analyst, there is always going to be a level of clarity and alignment in which the analyst is telling you. So in the Twitter space, he is essentially saying you're in a car, you're the trader, you're driving, the analyst should be in the passenger seat. It's as if you're going on a road trip. When you're going on the road trip, you don't know where you're going. You have the passenger driver. They are the person who is giving you the instructions as to where to go. They have the map as to where you need to, follow in terms of take a left here, take a right here, keep going straight, X, Y, and Z, da, 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 da. That is essentially what the analyst is when you're engaging with the markets. The analyst is telling you, okay, when this happens here, we're going to do Y. And then when Y happens, we're going to look to do X, and we're going to look to do X, Y, and Z, da, 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 da. So, away from that tangent, like I was mentioning before I went on a tangent, I was saying that if a point of inception has been established before the windows of time we're looking for points of inception to present themselves, what is going to occur is a return back to that point of inception if nothing of significance has happened. Now, when we're taking a look at this segment of price action, what is going to be something of significance to happen? It would essentially be price action engaging with these highs. These highs are all stacked up on top of each other, and this is an unfilled PD array. It's an unfilled M5 and an unfilled M15 PD array, being a SIBI. If price action was to come and engage with this high before our time window, then it would be more than okay for me to look to move my stop loss to break even. But I ended up moving my stop loss to break even ahead of that. And in fact, when I entered the trade, I was moving with the plan of break even or manage stop loss when this high is engaged with. But I ended up doing it before. I ended up moving my stop loss once we ended up engaging with this high right here. So we have this very, this is annoying me. We have this, so we have this very expansive candle that resides right here. So this 1439 candle, very expansive. We have a devil's mark that resides right under it, and we have that expansion towards buy side towards these equal highs, and then we ended up forming an imbalance. So I'm looking at this imbalance like let's utilize this imbalance for us to continue this buy side delivery motion. So we end up coming, we engage with that imbalance, and then we come and engage with this high, and that's when I look to move my stop loss to break even. I moved my stop loss to break even, but I was still under the awareness that this propulsion block has not been engaged with yet. It hadn't been engaged with, and I was under the awareness that it could be engaged with because we still haven't rolled into the window of time that we are looking to see reversals take place at. And what we end up seeing is that we engage with this high. In fact, we may have even formed equal highs, simply just engineering. Yeah, so we simply just engineered more highs right here. We didn't even engage with this high. And this is another reason as to why I was very willing to engage with this price action again, because buy side still wasn't taken. This idea was not invalidated. So we simply engineer more highs under these highs right here, equal highs, and then we have this down close candle slamming, inversing this BISI right here. And I'm pretty sure in the execution video, when we have this candle, I move my stop loss back under here. So I move my stop loss back under the propulsion candle. But what I took a notice to was the fact that we ended up coming and engaging with the wick of the propulsion candle. Now, the wicks of anything across the lines of order block theory, I always pay attention to the bodies. I never pay attention to the wicks. Only very rare circumstances I'm paying attention to the wicks, and this is when I'm referring to higher time frames, because on higher time frames the wicks are a whole lot more sensitive than the lower time frames. But in this case, I ended up seeing that this wick was engaged with of the propulsion block, and then we ended up having the inversion of this PD array that resides right here. And this inversion is what led me to say, okay, I'm going to move break even. I want to see this PD array be utilized as an inversion for us to continue this buy side delivery motion to just rail through all of these highs that reside right here. But we end up seeing price action being very lethargic around this SIBI. We don't want to continue higher. We're not looking to do anything. We're simply just hanging around, and now our window of time has occurred. Our window of time has now approached, and what ends up happening is we come and we inverse this SIBI again, basically reclaiming it. And when this happened, I was actually trying to move my stop loss back under here, because when we inversed it, my stop loss was at break even. When I seen this, I wanted to move it back under here, but I didn't get to do that in time. It just came and immediately took me out, and it engaged with the propulsion block, and I took a notice of the fact that we didn't even close inside of the body of the propulsion block. So the idea was still valid, and now the only difference is we're within the window of time. We're looking for reversals to start happening. So when this occurred, when I was taken out of the trade break even, I essentially just rolled down into a lower time frame to see if signatures are going to present themselves for me to then look for that buy side delivery motion. So we have this candle coming, taking me out, and then we have a failure to change the state, and then we have a return back down. Kraken correlation presented itself here, and then we have a 15-second change in stay in delivery. So limit ordered right here, and then deliverance up towards buy side. And that is essentially it for the trade. In relation to what we were looking to target, 1400 opening. So we're looking to target the 1400 opening that resides right here, because we were framing the 1400 power of 3. When we are looking at this chart by itself, we have the 1400 go naked. When we're looking at the naked chart by itself right here, we have the 1400 candle opening right here. This is our hour 4 candle opening. Instantaneous deliverance down towards sell side. We're looking to frame the power of 3. So this is going to be deemed manipulation, and then we're going to look for that distribution up towards buy side. A very nice and easy target is going to be the 1400 opening, as well as the high that resides right here. So I was actually looking to collapse the trade at the high. So bringing it back, I was looking to collapse the trade at the high. But when we came and engaged with the 1400 opening, we ended up forming a Kraken correlation. So we ended up forming a Kraken correlation, and I simply just looked to manage my trade aggressively because my original take profit was already engaged with. In terms of the 1400 power of 3, I mean the 1400 opening, this is where the analyst within me said, before we even began delivering towards buy side, before we even had this Kraken correlation, the analyst within me said, we're going to look to collapse this trade at the 1400 opening. Yes, we can see higher deliverance. Yes, standard deviations project higher, but the 1400 opening is a very clear drawn liquidity. So we end up coming and engaging with our 1400 opening. Kraken correlation ends up presenting itself, and what I look to do is simply just put my stop loss at this intermediate term low, as it was utilizing this very small imbalance right here. So I didn't want to see price action displaced down below it. If it did, then I didn't want to be in the trade no longer, because either a reversal was going to take place or a retracement, and in this case it was simply a retracement. So if we grab the manipulation leg, so from this high all the way down to this low, we end up seeing the -2, -2.5 being utilized for the reaccumulation of orders in the first presented fair value gap of the PM session for today. And oof, that is ugly. So yeah, that is where we ended up having that reaccumulation of orders, as we can see on the M1. So reversal, market maker sell model on the 15-second, retracement on the M1, continuation up towards buy side. So that is essentially it for the trade. So tomorrow being the last day of the week, I'm going to look to do a weekly review, because like I mentioned at the start, a lot has occurred. We have done a lot over the past week and a half, 2 weeks, I'm not quite sure, but a lot has occurred, and to be quite honest, it's very smooth in a sense. And then when we're looking at the daily, when we're looking at the hour 4, we're seeing bullish signatures presenting themselves, we're seeing very efficient price action, And it's making me question in terms of, the last time I posted a weekly review, I had speculations of price action coming down and engaging down here, but I'm not going to touch on that just yet because, well, I'm just going to wait until the week collapses. But overall, looking at this potential for a TGIF, we could end up fading this previous month high for tomorrow and just having a TGIF. So it would look something like this. Not necessarily fade the previous week, I mean the previous month high, but we could look for deliverance up into the minus, I mean the 0.2, 0.3% or 20 to 30% of the week's range, and then we have that deliverance up to the monthly previous month high. Honestly, you just have to wake up and see what has happened overall during the overnight sessions. But yeah, that is essentially it for the trade.